Okay, there it is. And we're live, actually. Ain't that a trip or two? Let's go back to the top. And what happened? Of course, we're going to turn on out. Welcome to episode 3 of the Investor Stats Care Studio 1209. I'm Susan Downs, and this is where we are going to build our legacy one investment at a time, guys. Thanks for tuning in. And I want to start right away with a cleanup of some of what I said in episode 2. Wording mishaps. And the first one is the broker I couldn't remember. I said Schwartz, and it's actually Schwab. Schwab was the broker that took over Options Express, that was my first broker when I got into the business, and I actually paper traded, and then I put some real money down and analysis paralysis. But I got better as I went along, so will you. Should you decide to get into this market, and that's where some other things come in. The second thing is so this, of course, Schwab, who merged with also TD Ameritrade. The second thing is WTI. I said it was West Texas Instrument. I always thought it was that, but it's actually West Texas Intermediate, which measures crude oil. It's right now, I think it's sitting around $67 a barrel. That's crude oil. So that's a pretty good price. Find a gas station that's not just off the highway or just before you get to the highway, because you're going to get the highest price there. But gas is like ranging around $3. I'm not sure what it is nationwide, but right here in the DMV, it's around $3. All right, so before we get into it, if you haven't subscribed, please subscribe to the channel. Hit the thumbs up, like it, and comment below so you'll know when my next episode posts as well. It does help to support the channel, and it supports the whole YouTube algorithm. So let's get to work. Of course, the very first thing I need to do is go to my banners and put up the disclaimer. Seriously, guys, gals, anybody who's on here, if you're thinking about investing in the stock market, one investment at a time to build wealth and to leave a legacy to your forward generation, you do want to seek out the services of a certified professional accountant or a financial consultant or planner. My channel and what I do here is educational and informational purposes only, just to keep you market aware. I'll throw out some stocks out there that are on my market watch list. And it's, the tool that we're going to use is going to help us just look at what the market is doing, measure it by charts, and see, what it's actually jumping around, and look at some ticker symbols, find out what these companies mean, what they do, who they are, that sort of thing. So that is what the ticker symbol. I mean, that's that's what the disclaimer is all about. All right, so the ticker symbols that you see scrolling down at the bottom right now, I've actually replaced a few, added a few, deleted a few. But I wanted to get off of the whole tech thing and sort of bring in and introduce some stock ticker symbols. If you're keeping note in a notebook, this is the way. This is the way I actually learn these ticker symbols, and I can pretty much say them off the top of my head. Outside of the fact that I've been actually in the market for about 15 years, so I should know most of them. But the way I started learning was every time I saw a company that I liked, like maybe the Gap. I wanted to write down what the ticker symbol was and the name of it right after. So the Gap is actually GOP. But then you have Coca-Cola, which is KO, right? And let's see, you have Nike, which is NKE, Abercrombie and Fitch, which is ANF. What do I have down here? McDonald's, MCD. TJX is TJ Maxx. Starbucks, SBUX. So getting acquainted with the stock symbols helps you get through looking at charts quickly. I've also and also Costco and BJ's, but I've also included KKR. They're basically an investment, financial services, asset management. They buy companies, they merge companies, they do real estate, that sort of thing. But a few years back, I think it was 2019, they decided they wanted to offer to buy Walgreens. The Walgreens had just bought out Rite Aid, I think maybe a year or two ago, before that, and changed all the Rite Aids to Walgreens, closed down a few Rite Aids that weren't performing well. You know, they all depend on when they have their earnings, it's you know, store to store. So how each store is performing. And if it's not performing well, they'll close down that store. That way they can find the medium percentage of growth or loss, profit or loss for the company. And so back then they offered them $70 billion. That's a lot of billions for Walgreens. But Walgreens said, in the private talks, we're not ready yet. So what they basically did was they stayed in the market. Now KKR has come back around. With this volatile environment, I don't know, Walgreen Boots Alliance or WBA has gone back to the table in private talks to see if, they could make a deal, right? So KKR, I have that down here in the ticker symbols. I don't know how much they're offering this time around to Walgreens, but they're talking. All right, so let's catch up on what happened last week in the market. Let's start with the speeches first. The market opened down a little bit. It was in the red, right? Then the White House spoke at the top of the market, I think around 10:30, 11 o'clock, maybe earlier. And the market did go down significantly. I think at its low, before Powell spoke, it was probably close to about, 700, a negative 700, almost, 1.5%, 2% down. And then Jay Powell from the Federal Reserve came on. And he spoke. He wasn't hawkish. He wasn't dovish. He was just kind of stagflation about the market. There's that word again coming in. It's not an inflation. It's not a recession. It's more like a stagflation, however they want to go. Stalemate. Like, I'm not going to take your rates up. I'm not going to take your rates down. We're just going to keep them just the way they are, because the the position of no contest with the Federal Reserve um, basically means that they're waiting for clarification from the White House. Because right now, tariffs are up, tariffs are down. Tariffs are up, tariffs are down. I feel like I'm playing basketball with the trickle down economics, which are taxes trickling down to the consumer. But let's not go there. Let's stay positive, right? But the investors felt a little better when Powell got up there and said, you know, we need to kind of wait and see what the market's going to do because we don't really have an idea of what the tariffs will do to the market or even if it's going to be something that stays permanently in the market. So I don't think they're going to know until 3 to 6 months down the line. In the meantime, I don't know. We may get a quarter percentage up in rates or a quarter percentage down in rates, depending on where we land, when we land. So at the end of the week, the markets did close up. The Dow and the S&P were up about 0.5%, and the NASDAQ was up about 0.75%, which is good. Last week, we also had the non-farm jobs report, and that is for February. Basically, all that means is that they measure the jobless claims for regular jobs, like, just your average worker. Has nothing to do with anybody who works on a farm and that sort of thing. But it also measures, so we came in at 150K. It also measures the unemployment rate, and that's been ranging between 4.0 to 4.2% from I think the end of 2024 till about now. But before, I think we were looking at somewhere around 3.8 to 4.0 in the unemployment rate, which was great. And so it's not up that much, but 4.1% is ticking up. And speaking of tickers and sentiment in the market, the VIX, which is the volatility index, which measures the sentiment of the market, whether people are risk on or risk off, is high. When it's high, it's risk off. It's like people are like, it's a volatile market. I think it was somewhere around 23% when it closed. Anything above 18 or 15, 18% is a complacent market. That's risk on, reward possibly, over a period of time. So right now the VIX is high, the market is volatile, and that was that point right there. So I am scrolling my notes just so you guys know. But when it comes to non-farm, it's these numbers are put together by the U.S. Bureau of Labor. There it is. Okay, so we can get into that a little more in another video, because that's a whole nother video right there. But like I said, the ticker symbol below is, I put a little more retail in there so you guys can see that. Also, we have a new ticker symbol down there. Instead of using Yahoo's ticker symbol, right today I'm using MarketWatch. And these are current. These things are current. Oh, by the way, speaking of which, happy daylight savings time. We did spring back, so we lost an hour. Fall forward, it always confuses me. But anyway, I think when I woke up, it was an hour later. Yeah. So the time springs forward. So we time traveled while we slept. Let me stop. Oh my gosh. Anyway, I'm studio trader. I'm Susan Downs here at Investors Desk. This is all about the process of investing something to build a legacy. My website is Investors Desk. You can actually put your phone up there to the QR code and it'll click over to my website, which I'm still working on building up, by the way. So that's that. And I did want to show you the. Oh, wait a minute. Did we get through all of last week's news? Because we need to get into next week's news. But I'm going to do that when I get to the charts. I did want to show you the heat map. Okay, so this heat map, as you know, comes from TradingView, and it does actually show the up and down. You know, who's performing, who's not performing on the quick. But if you do go to tradingview.com, which is a great resource and I recommend it, then when you hover over a symbol, what you'll see is popped up at the bottom in the middle, you'll see, you know, more information about the percentage of gain or loss and what the actual ticker symbol is. I'm not sure if there's a delay in that, but could be like you know, a 5 or 10 minute delay that you get that information. But I think they're pretty much on point. So that's a heat map. That's a really quick, cool overview of the market. But I really wanted to get to today is our resource tool. And it is going to be We Bull or We Bear. I hope that from episode 2 you were able to go to my link, click on it, and open up Webull or Webul. Open up Webull, and it's free. You don't have to invest anything. You can start paper trading with 100K, or you can put in the qualified amount of money so that you can get some fractional shares, so you can have some stocks back there to watch. You don't have to put any more money in there, but you can have some stocks back there to watch. I believe right now it's somewhere around, I don't know, 20, 40, 50, 70 shares, fractional shares that you can get to kind of fill the portfolio up. And it's 1 to 100,000th of a fraction that you can get. I don't know how they're going to fraction up these shares, but I am an affiliate. If you do click on the link and you do decide to, you know, paper trade to learn the market or put down the qualified amount that'll get you those fractional shares, which is, drum roll please, I don't have it at my fingertips. I'll have to figure that one out. $5 big whole dollars, and you get a whole bunch of fractional shares to put in a real money portfolio. Now, the thing about paper trading, like I said before, is easy. You win a lot when you paper trade. But when you have real money on the line, it's analysis paralysis, and you start saying, it's my own money, I'm not sure if I want to invest it. Well, invest small. You know, trade small, trade often. I wouldn't say trade often in this market, though, but I will say trade small. That is something that you want to be careful of. I do not day trade. At this time, I am a position trader. 2 weeks to a month, I'll trade something. I'll go in and out just to balance my portfolios. And but if they're fine, I don't have to do a thing. But if I see something else out there, I might swing trade. And that's anywhere from 2 to 3 to week to 2 weeks of a trade. Put it on, a week later, take it off. Put it on, 2 days later, take it off. That's swing trading. So, but investing is different. It's just keeping a balanced, diversified portfolio that you can rely on for retirement or for passing on generational wealth. Cool. So with this a calendar chart on Webull, before I go over, you can actually scan the code, like I said, and get out to the website. I will be updating that and adding more. So let's kind of look at this real quick. Hopefully you guys did something. That was your homework. Ooh, I'm giving out homework? No, come on. I'm not a teacher. And I'm not a preacher because this is not a sermon. It's just some cool informational entertainment on being market aware. Okay, so when you go into Webull, you're probably going to see the airplane, which kind of looks like that. And I made it a light chart, but you can go dark. And you just go down here to settings. And I'm not going to teach you this or train you on any of this because there are plenty of people out here online, although I will get into the weeds a bit, but there are plenty of people out here online that actually teach Webull. And Webull itself has their own training classes. But as we're moving through this process here at Investors Desk, I will be touching on how to manipulate through Webull. So the one that I usually work with when I'm working alone, and I'm not trying to show anything because in the dark, if I were to do this, there's the spinning wheel. Let's see how long it's going to spin for. There we go. It feels like it's a little hard to read, especially the words. And also especially the chart. So I'm going to go back to light mode. Spin the wheel again. The wheel of fortune. And we're going to look at a couple of stocks. And it's always going to be about what's going to happen this week coming in the market. We have a few earnings coming up. And this is the overview of what you're going to see when you first come into the market, right? And you can just hover over these and, they'll give you price action and things like that. So this is the ETFs. They also have the top performing stocks that you can actually look at. Then there's ETFs if you want to look at those. So yeah, but the one that I want to get to here is this one. And very quickly, we can look at, and this is totally, you can totally make this your own thing. I'd be careful doing that right now, but you can set up different ways to look at your data once you get used to using this, right? So this is just basic simple. Now, who do I have up here right now? And what is this? This is the VWAP, and that's the VIX. That's part of, I'm sorry. I don't have the VWAP. What am I talking about? I have a Bristol Myers Squibb. That is not a stock that is going to be having earnings next week. So let's put up one that is. And that would be Oracle. And I believe Oracle's symbol is, I don't play that stock, ORCL. If I get it right, it's going to pop up. And they report earnings Monday after the market. Now, normally stocks will go up, but that's Oracle, and it's down quite a bit off of its high in, what was that, 2024, December of 2024, and they're having their third quarter or earnings coming up. And here it is down here. Here's the E. And what is, oh yeah, 310. God, we're in March. I'm saying, why does it say 3? I'm still thinking February. Hold on, let me see what I got going on here. All right. So let's go back over here to the chart. So the thing you want to, what you want to look for here when you get to your chart is, let's open this up, is the high of the day, what it opened at, which is previous day, the low, and of course, what it closed at. Or I'm sorry, this is the previous close. This is what it opened. So a previous close happens the night before. The market generally closes at 4 p.m. And here's the deal. If you have permission from your broker, you can continue to trade after the market for, I believe, another half hour to maybe 45 minutes. Then the market closes for good. 15 minutes later, the foreign exchange market opens at 5 p.m. And it's pretty much 24 hours. I can't remember when they do shut down, but I think it's somewhere around 3 o'clock. And then it opens back up a couple hours later. I could be wrong. I don't trade the foreign exchange. I don't trade futures, and I don't trade commodities unless they're in an ETF. Okay, so we have Oracle reporting earnings. That's a pretty expensive stock, but it's something you might want to put in your portfolio. Here's what I want to tell you. Basically, it has everything you need here at the top to do research, and this is what this tool is about. So you're not going to be an options player right away, but you can make a note, and the note I made was that reports on Monday, and I'm going to just say after the market, or AM. After market close is what the pig Latin is. All right. So I just made a note, another added note to that. The comments takes you into the Webull community. I'd leave that alone for now, but it's fun to, scroll through. You have your stock up there, and there are other folks in the Webull community that are talking about the stock, whether they're bullish, bearish, and maybe have some news that you are interested in. When it comes to their financials, I don't recommend you get them from here. There's another resource I can show you that you might want to look at to get a better idea of what financials look like. It's more graphical than numerical, like that. Then you have your analysts, and the analysts say it's a buy. Now, that's a big number, 155. You might want to get a fractional or a couple of fractional shares of Oracle and put them in your portfolio, right? Just to diversify, just because, it's a buy. It's also a hold. It's a large buy, a strong buy, a buy, and a definite hold. Nobody's really saying sell. Oracle. And then if you don't know anything about the company, then you can go over here to profile. If you're interested in learning about a company, and then read what they are. Well, Oracle is, what are they actually? I'm still thinking Bristol Myers is a biopharmaceutical, but Oracle's like more of a cloud chip manufacturer. Um, yeah, more cloud. Uh, it's in the tech market, so you might want to take a look at that one, and then you can go back over to your chart. Now, when you're coming in and you just want to see what's going on, you're gonna go straight to your watch list, which sits over here, and then you can just scroll on down and look at the symbols that you have on your, what is that? Zynga. I don't think they're on the market any longer. Yeah, no. The SPY, you can look at Disney. So you can quickly look at your stocks, and at any time you're looking at your stocks, look down at the bottom and see when they had their earnings. Like over here, here's another earnings that they just reported in February of this year. It was their Q1 or first quarter earnings report. So, and then if you're interested in a stock like Disney, you might want to come over here, and the first thing you want to look at is, okay, what was its high, 123, and what was its low, 83. So the best way to find out if this is a good time to invest is you take those two numbers, um, you add them together and divide by 2. See what that medium number is, and it could be the right price to get into a stock like this. Like the median number might end up being somewhere around, I don't know, 95 or 96 bucks a share. So you may want to wait for a pullback on this one because the top end is 122 or 123. Okay, so I'm going to keep Disney on my watch list, and then I'm going to go down and I'm going to check out NVIDIA, which I do have in my portfolio, not in this one, of course. This is kind of like my research play portfolio. Don't have much back there. The same NVIDIA is the chip stock, AMD. Look at that. That is crazy, wild and crazy. And then I want to look at maybe a gold stock. Why is that doing that? There it is. Oh, I hit this little thing right here, which I think popped the news up. Or did it? No, this one popped the news up. Nope. Which one popped the news up? Something popped the news up. Let's go back to AMD. There it is. Yeah. Okay. Well, whatever. Let's go on down. So this is a way to quickly go through your stocks. Um, Another thing you want to know when you're using this as a research tool is, hey, I want to create my own watch list. All right, very cool. You just go here, you add a watch list, and say you want this watch list to be ETFs, and you're going to be looking at exchange traded funds only, and you're going to say okay. But let's go there. Right now, you don't have anything in that watch list, so you want to add something, so add a symbol. Very simple. So I'm going to add XLF, which is the financial sector, and I'm going to add XLK, which is technology. I'm going to add XLU, utilities, XLB, building and materials. Okay, so I added these. Now I can just go to there and I can see what each of my ETF funds look like. So if you don't want to get into any one utility stock or any one technology stock or any one um, real estate or financial stock, then you can get a fund, and it's always recommended that that's another way to diversify. Can you get fractional funds in an ETF? Good question. I'll research that, but I believe you can. Don't quote me on that. I'll come back to you and I'll let you know. So you can easily just go through and see what they were doing on the day. Okay. So building and materials in the green. I guess that stock would be up, considering the fact that they gave a reprieve till April 2nd. I'm not sure. They might change it on Monday or Tuesday, but they gave a reprieve saying that, they're not going to, they're going to relax the tariffs, and in that way there could be the same trade agreement going back and forth across the border. So we get a lot of our wood and our steel, our aluminum and copper and things like that from Canada and Europe and places like that. So right now, infrastructure is still there, lumber, building, but I would just watch what the market does. Technology, same thing. Even though it is in the green, look, it is definitely a sit and watch kind of portfolio. But, and you can always go in and out of these, not on a day, right? Financials are down, but I believe they were up for the week. And we're going to look at that because I have another resource here for you guys. You might want to write this one down too. And that is the SPDR Sectors, where I did get my ETF funds from. And I basically only do these. Don't know why, but I do. I like them. And let me see if I can scroll over. There's communication services. You can scroll over to consumer discretionary, consumer staples, energy, financials, healthcare, industrials, building materials, real estate, technology, utilities. Did I say that already? No, I did not. Okay, so these encompass pretty much every single company that's on the market, unless they're a small cap or they're on the S&P 500 or 5,000 or something like that. But if you scroll down, and this is part of your research for your diversification of your portfolio, we can see that, like I said, the S&P index, which is where these funds generate from, S&P, which is the 500 index that's measured out there, along with the Dow 30 and the Russell 2000 and the NASDAQ 100. So communications, excellent. Consumer discretionary, you're like, okay, what's that? I'm not sure, but we're going to find out. Consumer staples was up slightly. Energy, up a lot. We'll have to find out why and who is in the top 10. That's pushing energy up. Financials, they said it was down, but all the news says that they reported good earnings. Healthcare was flat. Industrials in the green. Materials, real estate, technology, and utilities. I do believe everybody's taking advantage of this March portal into April Fools. Don't trade on April Fool's Day. I learned that lesson. No, I'm just kidding. All right, so what is in the consumer discretionary fund top 10 that okay, it's trading at $205. And what are the top 10 holdings? Okay, we got tech stocks in the top 10. But we have a couple of retail stores. We have Amazon and Tesla. Amazon's number one at a 20% holding rate. So the top rate is Amazon. That might move to the number third if Home Depot goes up. So that's how they balance these funds. Tesla is at 12%. And then you have Home Depot, McDonald's, you have Booking Holdings or Booking.com, Lowe's, TJ Maxx is in discretionary, Starbucks, Nike. So basically, a discretionary fund is consumer retail communication sort of thing, which begs to ask the question in consumer staples, which is green, and it's only 82.86 per share. What's the top holding in that? Now, here are our real goods and eats and purchases that we as consumers. These are consumer staples. You got your Costco, your Procter & Gamble, Walmart, Coca-Cola, Philip Morris, Pepsi-Cola, the Mondelez. So these are Target. So that's the top 10 in the holdings. And we can go over to this one here and this one here. And we've come to the end of our rainbow. And let's see, what's back here? They have Lamb Western Holdings Inc. in consumer staples. Now, it would be interesting to know what is that. I don't even know that symbol, LW. So what I would do is I would come to my chart and click on the symbol and say LW and Lamb Westerns right there. Okay, it is up, but what the heck kind of company is it? First of all, I want to see what the analysts are saying. It's a buy. It's basically a hold. We might want to later look at corporate actions, but what I want to know is what is this company? It's a global producer, distributor, and marketer of value-added frozen potato products. Okay, so I guess that's in your frozen aisle. Frozen potatoes. There must be more to that. Anyway, you're going to read this and you're going to find out what this market is all about. Also, we're going to go over here. They don't have, I guess, consumer sentiment, what your peer-to-peer would be doing in the market would be over here with comments and see if anybody's talking about this stock symbol, right? You can make a note right here, like we did before, and say, just for quick reference, did I say potato? Potato? Actually, what I want to say is frozen potato. Frozen potato products? Okay, interesting. So that's my note of that. And I'm going to come back to my chart and go, I don't think I'm going to put it in my watch list. But, so there you go. Now, if you want to delete anything, let's go to ETFs. Let's go to our ETFs. Now, let's say you took off the fund and you want to delete one of these products. So what you simply want to do is go over here where it says watch list. You're going to go and click on this one. And then I click on it. Yeah. You're going to click on this one. And then you're going to be able to right click and delete it. This one is financials and delete it. And that's it. And then if you want to add a different one, you just click add in your ETF watch list. And now you're going to add, what don't we have up here? Let's add healthcare, XLV. And then we can just quickly go to that one and see how they're performing. And of course, like I said, we want to go over and check out what the 52-week high and 52-week low is on LW. Oops. Let's go back. LW. That was, I did Lilly. By the way, Lilly, I believe they had their earnings already. Yeah, Lilly had their earnings February. You can see it pop up there, February 6th of this year, Q4. And they also did a dividend, $1.50 per share. Ooh, give me some Lilly, but I can't afford but one share of that stock. That's almost $870. But they were down. They're down a lot, considering that stock was hitting somewhere up around $1,000 a share, if not more, guys. So let's go back to our LW lamb. I just want to see what the 52-week high was. Wow, 105. And the 52-week low is 49. So it is at or close to its low. And what would drive that market? High inflation and freezing potatoes probably would help them last longer due to the farming crisis we may be having or agricultural crisis we may be having in the near future, but we don't know. Nobody knows anything. Alrighty. So I think that is all she wrote there. And I'm going to go back here to this screen. Once again, I don't know how it happens, but it happened that I'm about an hour into the broadcast, which is fine because I do want to stream live on this process of market education, information, and our thoughts on investing in the market and building a legacy, building wealth, really coming out of this cycle in 2026 and 2028, being able to say, okay, I understand what the market is like. It is a game that is played in the financial interest of business. Corporations need our investments as retail traders and as investors so that they can invest in more and other things. And that's basically what the stock, you get a piece of the company. Simple as that. Back in the old days, you actually got a certificate and you were in the market for the long haul. You know, it was difficult to go in and out of a market back in the day. You had to basically get your broker on the phone and, you know, maybe 20 minutes to 24 hours later, you were in that stock or that stock was yours. And you didn't buy just one share. You know, back in the day, you were buying 100 shares of a stock. But anyway, it gives a company the opportunity to invest more money. So when you're talking about the financials of a company, you're talking about revenue and income, revenue versus income, and we'll get into that in a little bit. But just an overview before I sign off. The revenue is how much, and I have my notes because I can explain it. But a revenue is the gross sale of what the company makes, and the income is the net sales, and that's after whatever expenses are owed, and that would be um, the that would be yeah that would be whatever inventory they have. Um, so that would be the net income. So revenue gross, income net, right? And the gross is the average sales of the units sold. So what are the average sales between um, the Tesla models? I don't know why I used that example. How many units were sold depends on whether they made the money or not compared to after their expenses. So if they made 20 billion in average units sold, but they owed on loan, they owed 17 billion, and then they had other things that they had to pay off, like employees and real estate holdings or whatever. Um, their net income could either be low or below. Below is not good. Low is fine, uh, but it could be just 1.2 or $5 billion of actual net income into the company. So we are the drivers of the market. We are, um, and we don't need monopolies. We need uh, comparative markets. We need markets that, yes, compete with one another. That's called capitalism. It's called, uh, you know, what it is. So that's it. This is it for episode 3. We're going to go ahead and sign out. Got my green tea here ready to kind of end the night up. I enjoyed doing this stream. This stream was unlisted, and we will go live next weekend. Ooh, let's see what happens there. Thanks for joining me. I appreciate you guys being here. Studio 1209 with Investors Desk. I'm Susan Downs, studio trader, and I enjoy bringing you information and educational content here. And I'll see you next week.